GTA average home plunge at a rate not since seen in the 1990s. That headline, very good. Toronto home sales down 45% year over year. Toronto home prices down 14% from a year ago. That article, also very good headline. Look, there's going to be a lot of these headlines that you're seeing between now and actually I would say until end of March or so. And we knew these headlines are going to come out. Well, at least I did. If you were following any of my content, you would also know because the year over year numbers are really, really bad. Now, are these all true? Absolutely. Just how bad is it though in the GTA market? Well, I'm going to break this all down for you in this month's Market Watch. Now, if you're looking for some help on how to navigate the real estate market, whether you're being on the offensive or on the defensive, and honestly, most people that are working with us right now, they're just trying to move a home because you know what? Whether it's a good market or a bad market, if you have to move, you have to move. There's no way to time the market. So you can kind of book a call with me using the link that's right here. It's www.chatwithzen.com to determine whether it actually is a good time for you right now, or you can just wait a little bit. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome educational real estate content just like this video for you. And on this episode, the first Market Watch of 2023. So the question is the real estate market burning based on all the headlines I just showed you earlier at the start of this video? Honestly, it really just depends on your outlook. Honestly, that really is, right? Like, are you optimistic or are you pessimistic? And you're going to see what I mean by that when you look at the numbers I'm talking about in this video. Like in 2022, I felt like towards the end of the year, it was kind of cool to be bearish, but seeing how we have these numbers again, they're showing kind of like same. It's basically flat line. Now, those headlines were expected, like I was saying earlier, and they're only going to get worse in the next 2 months as we kind of pass through the 1 year mark of February 2022 and March 2022, where basically was the peak in the prices. So when you compare year over year, it's going to get really bad. But when you compare it to say like a June last year, it'll be a lot better. So here are the numbers from the year over year numbers from TREB. So you can see that sales are basically down about 45%. And that's a big one. So a lot of people in our industry are probably making a lot less money. And that's also a 14-year low. Now prices are down 16.4% year over year. And if you look at the other metrics that I'll post over here, which is active listings, they've doubled. The average days on market, they've also doubled. So if you just look at that, all of those signs technically is pointing to what I would call a downward spiral where we see a lot of prices coming down and some would argue it's going to be crashing. Plus, don't forget, interest rates also just recently went up as well, right? So the narrative is going against us as a real estate professional. So are things really going to the poo-poo from here? Well, it's actually too early to know right now. Like I've been saying for the last, half a year, Q2. We'll know whether we have a flood of inventory coming to the market from people who had to use B lenders on their renewals or kind of the private lenders not renewing. Because at the moment right now, none of that stuff is on the market. We still have very little listings to sell, and that's what's keeping the prices very flat. Now, it's going to be very, very bearish, like I was saying, because if you look at this chart here, the orange line is the 2022 prices, the gray is the 2023, and we're going to be under the 2022 prices and potentially even under the 2021 prices, which is the blue line. So if things stay well, that's why I extrapolated in gray, right? They don't change from here, meaning it's exact same price, which, has been my best case scenario for Q1 and potentially Q2 this year. When the numbers come out for February and March, what I was saying earlier, be prepared for prices being down 30%. Yeah, 30%. And depending on how you calculate, it could be worse. Depending on if you calculate it in different regions, it could be even worse. But despite all these indicators of prices spiraling down, why am I saying it's too early to know? Well, if you have a look at the month over month data, which is generally the data I like to use to give you a more about temperature of the market and to determine the velocity and the direction which way it's heading, you can basically see that prices are more or less stable, more or less. Now they're down 1.19 from last month in December, which is fine. It's honestly not that bad, and I'll get into the historical importance of that later on in this video, but 1.19% is a small drop in the bucket. Now, sales, despite early signs of drop off, have kind of bounced back the latter half of January, and we actually closed the month with about 3,100 sales, which is only 0.5% less than December. So it's not that bad. Now, new listings did double, which by the way is normal if you were known in the market, because when you go from December to January, they just go up and they generally double. Again, I'll talk about more of that in the latter half of the video. And then you got your active listings, which is up about 6.3 or 6.2%, which honestly is not that bad. So inventory is slowly building, which should suggest that we have a slow grind downwards toward pricing, but it's not like it's being flooded right now. Now, if you look at the micro markets again in the chart, it's all over the place. And I honestly would not use the data that I'm presenting to you right here. I'm just putting here to be consistent with the rest of the month, because the sample size here is too small to derive anything, because detaches are coming down like crazy on the average, but there's just not that many are selling because the big $2-3 million aren't selling. Now, in the real estate community, there's a lot of chatter about activity picking up. Showings have definitely increased, but they're still low. And you can see that over here. Now, statistically speaking, right, they are low, but they have increased from December, and that's kind of the big jump. And that's what I think activity increasing is. But we're still down 30% from January 22 last year. And I mean, if you think about it, showings down 30% when sales are down 40% is kind of a positive indicator, at least for the market, from what I can tell. So activity picking up, there's some merit to it. But if you look at the offers written, which is this chart over here, you can kind of see that it's down 117%. Yeah. 117%. That means we have less than half the offers from January 22 when the market was really, really hot. So as like I was saying in the newsletter, which by the way, if you're not subscribed, you can do it so that right down here, activity doesn't equal sales. It just doesn't. However, I can comment on this. A good property that is severely underlisted will sell with tons of offers and tons of showings, and it's going to drive a lot of people insane. Now, a common strategy as of late that I've seen happening right now is you underlist it by 100 to 200 grand. You get everyone piling in there thinking they can get a deal. You get tons of showings, tons of offer. But I can tell you, a lot of offers right now are actually lowballs. We have a lot of listings. I know because I see them come in. And like I was saying last week, most of the time there isn't kind of like a meeting of minds for the market value right now between the buyers and the sellers. Many buyers think that they can lowball every single listing out there because they read the headlines, the interest rates have gone up, sales are down, 14-year low, and that sellers are desperate, which while true is not on every single property. But that doesn't prevent someone from paying fair market value for a good property if it's very desired, because there's a lot of people still looking, but there's not a lot of good inventory, right? So what fair market is right now is still subjective, right? Because there's price discovery downwards and upwards depending on the market you're in and kind of local area and the subset of the market, right? So this is why I kind of advise the team, don't underlist, because despite it making you seem like you got 100 showings, 50 plus offers, you can brag about how great of a realtor you are. Most of the properties I've seen that are selling using this strategy sold for basically what I thought it would be, that is market value. You just waste a lot of people's time, more or less, but you make yourself look good. But regardless, it gets the job done, and the realtors can give themselves, a nice pat on the back, right? But I really don't think it's necessary, because most of the time it's less than what I think the market value is. Now, let me show you the macro data for some hot markets that we're seeing multiple offers in right now to kind of confirm that there are kind of these segments of the market that are seeing these multiple offers for these homes. So you can see in this chart over here, Markham and Richmond Hill homes are selling for 104% of asking price and 102% of asking price respectively in January. So what the heck, right? It just tells you that there's more demand than there are actual inventory, which I've been saying for a while in those areas. Then you also have Ajax, that's 101% of list price. Like I was saying, this is a function that there's more demand than there is product or good product. And one would argue maybe all the listing agents in those areas are just, purposely under listing them, but it wouldn't be working at all if there was no demand. Do you see what I mean? So the fact that you can underlist and still sell means that there are people competing and paying over the list price for it. This is what I was saying. A good property in a good area will fetch good offers and market price, maybe sometimes more. The problem is there's not much good stuff. So most of the buyers are flocking to the one or two good stuff that's in the market right now, because most of the market has crap inventory. Now, the ironic thing is that sometimes you don't position yourself for multiple offers and multiples happen. And we had that happen on our listing as well. And this is why I say, if you find a place that needs a little bit of like TLC and renos right now, that's actually a good opportunity right now because a lot of people don't have the capital to do the renovations given the high rates. Now, the other market I want to draw attention to is Toronto East. So this is anything east of the Don Valley, more or less. If you go north to Eglinton, it's a little bit, west of it, but whatever, right? Freeholds in that Toronto East area are still bumping. So these are like your 3-bedroom semis that are totally ready to move in. I'm seeing tons of offers on that and tons of underlisting. They're rocking very hard. Now, this is why I was saying it's very important for you to work with someone who actually knows what the heck is going on. Because if you weren't looking in Markham, Richmond Hill, or Toronto East, the market's very slow. But if you're looking in those areas, it's crazy, right? So you can't take anecdotal evidence and apply it to the macro and say generalizing the entire market works in that way. But at the same time, you can't take the macro, right, and apply it to the micro, especially if you're looking again in Richmond Hill, Markham, or East Toronto. So you need a little bit of mix of both. Now, if you found this content useful, it means probably someone else will as well, because a lot of people are trying to make some kind of decision in the real estate market in 2022 right now. I'm just trying to give an explanation of what's happening in the market right now. So I appreciate if you can share that with family and friends who are also looking to make a move. And while you're at it, just subscribe. It's good for me and you, right? Because you'll see all the content that comes up. And if you are looking for some help on how to manage this kind of craziness that's happening in the real estate market and want to understand and work with somebody who knows the micro and the macro in the real estate market that you're looking for, you can book a call with me using a link that's right here. It's www.chatwithzen.com. Okay, so now let's look at the historical data set and whether some of this data that we're seeing is a little bit normal or abnormal. Since the year rolled over, I want to show you a little bit of let's call it a change from December to January, because this is a very weird transition, right? And I want to show you on a month-to-month basis as a percentage what this change actually means. And honestly, like how little of a difference these like year-over-year numbers actually matter. Because when you look at the micro, right, the month-over-month, that's how you determine the velocity and the direction, because the market's changing so quickly. So this first chart I have here is basically a percentage change in sales from December to January as a percentage, right? So in the last 20 years, on average, we normally get an increase in sales going from December to January, which is that orange line that cuts across, and the average is 3%. Now this year, we got minus 0.55%, right? So if you look at the 10-year average, it's actually minus 1.2. It's not on the chart, but it's just letting you know because it's the 10 years that's a little bit closer than the rest of the 20 years. That's why over here, like this chunk of the blue line in the last 10 years is below the orange line, because the last 10 years, it's been not the same kind of average the last 20 years. And this is just to show you that the number of sales we got going from 2022 to 2023 in December is relatively on par within the 10-year average, just based on a volume as a percentage. But obviously, it's a huge anomaly drop off being a 14-year low. But if you look at it as a percentage change, more or less the same thing, right? Now, this over here is the new listings and it applies the same thing. The running average, when we go from January to December, is that we get 112% increase in active listings, meaning that we double going from December to January. And this year, we got 88% more. Didn't really quite double. I'll just call it within the average bound. So you can see nothing has really changed too much, right? And you can see over here with new listings, same thing. We're relatively normal this month as well. If anything, we're again below the average. This is what I'm saying. So active listings and new listings are below the 10-year average. Now, if you look at prices, this one kind of has a big swing in the chart, but you can effectively see that there were two peaks from December to January. Those were 2017 and 2022, which were massive, massive run up in prices that where you saw like 3% increase in a month over a month. And that's why you see those giant peaks. But if you kind of average it out in the last 10 years, including this year and the GFC, it's a 1% increase. This year, we got minus 1.19. So you could argue it's a pretty big deviation because it's on the flip side of the line. But in the grand scheme of things, it's honestly not that big of a deal, and it doesn't look like that big of a deal to me anyways. However, do keep this in mind, and this is what it will be a slow grind for prices going downwards. If inventory continues to grow slowly and demand wanes, 12 months of what we're seeing right now in January is ultimately still a 12% year-over-year drop. Yeah, 12%. This is why I've been saying for the year, the best case scenario I can see right now is things are stable and flat, given where the interest rates are heading right now. Otherwise, a slow grind down at this pace that we're seeing right now. Now, historically, if you look at the comparisons, yes, sales are down a massive, massive amount And we're at 14-year lows. Haven't seen it since 2009, despite crazy population growth in Southern Ontario. But as with the last 6 months that we've been talking about, this slowdown in activity is balanced out by a slowdown in active listings and new listings, which are well below the 20-year average right now. This is why the month of inventory only inched up a tiny little bit to 3 at the end of January. Then you have new listings over here that's still very low, even less than last year. So the ultimate indicator right now, as I've been saying, is if the sellers do not show up in spring, we're going to have a supply problem for the current amount of demand that we have and potential demand that increases in spring. But if you believe the power of sales, the B-lender renewals, and the private renewals are all going to show up and flood the market, and we're going to have a ton of stuff to choose from, then prices are going to go down. As I've been saying, nobody knows. Nobody knows. Now, here's some anecdotal evidence I can tell you. Again, don't apply to the macro, but what I can tell you is I have the privilege of being able to pull mortgages on some of these properties that we're looking at so I can gain an information advantage from my clients. And when I am pulling a lot of these mortgages on these listings, most people are actually okay. I can see the size of their mortgages. I can tell if some of them may be a little bit underwater, maybe they're feeling a little bit of stress on the rate hikes. But the important thing is that there are some people who have multiple mortgages on the same property and they're very underwater and they're bleeding like crazy. But they're not necessarily power of selling, but they're just selling. But they're desperate to sell. So there are people who need to sell. And there are people who are just selling because maybe rates are higher. And I do think that the need to sell right now is still a very small amount. Can that change in the spring? Absolutely. But nobody knows how much is coming on in the spring. Anyways, that's a wrap. Hopefully this gives you a very detailed analysis of what the heck is happening in the real estate market right now, because holy cow, are you going to be like thrown in many different directions just reading different headlines. And remember, the latest numbers don't really show much right now, other than like it's showing us it's kind of the same thing, tiny little bit of momentum heading in, but tiny bit of inventory building. And all the headlines, like I was saying, it's just noise at the moment right now, trying to get your eyeballs and attention. That's really all that's happening. Now, if you're looking for some help on how to navigate this real estate market, given how much of a detailed analysis I generally go down the numbers, and you kind of want to work with me, you can book a call using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.